Equity capital is the lifeblood of climate innovation, especially for carbon removal. Without it, we can't expect entrepreneurs and companies to push the boundaries of what's possible, or as I like to say, the art of the possible. It's a necessary tool to unlock innovation at the pace and scale that the climate crisis demands. And I'm really pleased to be joined this afternoon by an individual who has been at the forefront of this, his company's been at the forefront of this, and really driving confidence when you think about equity capital into carbon removal projects, specifically biochar. Josh Kaufman, CEO of Khasma Capital, has joined us today. And maybe Josh, share a little bit about yourself, your company, and any other opening remarks you've got today.
Sure, yeah, appreciate it. Good to be here. Josh Kaufman, CEO of Khasma Capital. So my journey is we're trying to get more low carbon infrastructure built. I personally was doing M&A at GE Power and then at an infrastructure fund and just saw that there's a lot of infrastructure dollars that want to invest in climate projects, but the pipeline is stuck. There's just too many binary risks for them to take on. A lot of them want things that just look like fixed income products, but they're not ready yet. And they're yet also not good fits for venture capital. The opportunities still are very capital intensive and don't have the opportunities for maybe 20x returns. There might not be too much technology differentiation between the opportunities. So how do you kind of get more of these projects to where they're investable by infrastructure? So we started Khasma Capital. Right now we're a $50 million fund. We've got 7 deals across alternative fuel, sustainable agriculture, and industrial decarbonization, some of which are in biochar.
Well, thanks for that, Josh. So a wide array of things. You hit on risk. So when you think about the risk reward profile, specifically for early equity checks, can you talk us through that process that you and your team take when doing an analysis there?
Yeah, I mean, that's the golden question, right? So I think really ultimately people say there's generally 2 types of capital in this world. There's the venture capital and then there's the infrastructure or project capital. Venture looks at lots of binary risks, but only needs 2 out of 10 to work, and those 2 will return the fund. Infrastructure is the opposite. They need almost all of them to work. They talk about returns, whether it ranges from 8% to 15%, it gets pretty tight. Well, what if you're in this in-between range? You still have binary risk and you could get a 0. What type of return do you need to compensate for that? So that's kind of the ultimate question, is how to make this model work. We have an approach to that in which we look at, do we believe it's going to be investable for the infrastructure community within 3 years? And if we think we can get there, then we think it's worth the risk of us taking on that binary risk.
Well, it makes sense. And when you think about binary risk and you think about first mover, one of the questions we get all the time, obviously at Grain, we're very focused on biochar and all the associated things that come with biochar. You've been a first mover. You've helped pave the way a little bit, certainly with standard biocarbon as a project. How does biochar fit into your portfolio today? How do you approach the overall investment thesis when it comes to biochar? Because this is a very unique insight for the audience, because this is more of a rarity in the space today, especially when it comes to equity capital.
Yeah, so we like biochar because in our model, when we think of things that we think the infrastructure community will like soon, biochar is something that always comes up. A lot of groups are interested in biochar primarily for its carbon removal benefits, but they haven't quite found the entry point, because generally what those funds tend to look for is fixed price offtakes, fixed price feedstock, proven technologies, and just the business isn't quite mature enough yet to provide all of those things. So we're generally taking one of those risks, not all of them, to try and scale something. And then the goal is to pin all 3 of those things down. And then we think, based on our discussions, there's a lot of infrastructure investors who will fund something like that.
And when we think about these investments, there's really 2 elements. There's the financial impacts, and then there's the biodiversity, social impact. Certainly, when you think about infrastructure projects, think about JFK Terminal 1, that was a big part of it. How do you bring in different businesses? How do you benefit the community of workers that are based there? How do you guys look at those 2 metrics, both financial and impact across your portfolio, and then maybe give us a little bit of a micro lens when it comes to biochar?
Everything we do is low carbon or resource efficient. And we view our capital as catalyzing certain industries. And so you referenced standard carbon, that plant is only 1,000 tons per year. But we view our money as more de-risking a business model, because if we can get it built and then provide the offtakes and the other aspects that an infrastructure fund might want, we hope to replicate that across a number of different plants. And so we are focused on what is the potential carbon removal of this sector if we can catalyze it.
And on the subject of continuing to de-risk and looking at projects like that, one of the key elements is technology selection. So one of the things we did at Grain close to a year ago now was launch an equipment matching tool, because so many project developers would come with a specific feedstock type, location, growth plan, throughput information, but really didn't have the comprehension of what is the best technology type. Is it a pyrolysis? Is it gasification? Is it modular? Is it fixed? How are you approaching technology? What are you seeing in the market? Any trends that get you excited? And any advice for some of the developers with a lens, of course, to the US?
Yeah, we're focused on that too, and we call it TRL 7 and above. So TRL is it was originally designed by NASA 1 through 9, and it's like, how ready is that technology on its commercialization path? So 9 is it's fully commercial and it's deployed everywhere. 1 means it's a drawing. Where are you in between? 7 means you've done it at kind of a commercial scale, but a large demo scale, but maybe not a commercial scale. What we look for is, have you used that type of feedstock at those temperatures, at those pressures, and produced that type of output for a meaningful amount of time? A lot of groups out there might say this technology works on a different type of feedstock, so it'll work on the feedstock we want, or this technology works at this scale, so we want to scale it up 10x, and we try and avoid those types of conversations. So we're looking at like the hard data of what have you done with these specific inputs that you're going to use. And that's important for us because we're trying to focus on exactly what we're trying to de-risk. In the case of biochar, really what we're trying to do is get to the fixed priced offtake. And that's really what's lacking, because a lot of the buyers of biochar don't want to give you a contract until they see the specs of your product. Well, you can't give them the specs of your product until you build the plant. A lot of investors won't give you money to build the plant until you have the offtake. So you run into this circular issue. So we're very focused on just using a technology that works, that we're pretty confident in terms of what the specs will be, and then taking those specs to the buyer and then getting the offtake.
With the goal of trying to drive the most high quality output as possible.
Right.
For the revenue streams. Makes sense. And big question, certainly on the exit side. So when we think, and obviously it's dependent on the type of investor, and there's a lot of elements to these projects. So how do you ring fence cash flows? How do you ensure and maintain the integrity of, if you've got a carbon revenue stream, what does that look like? And then certainly ensuring the assets appreciate in value so that you could potentially sell that project over a certain period of time. In your perspective, in the work at Khasma, how are you approaching the exit strategy when it comes to these biochar investments?
Yeah, so again, we always think about, is the infrastructure community going to be interested in this? And I think of the infrastructure community as basically looking for something as close to fixed income as you can get it. So they'll give you $100 and they want $10 back a year and to never have to worry about it. And how do you create that certainty? You have buttoned up feedstock, you have buttoned up offtake, you have a wrap on the operations, and if someone messes up, they can go find that person and the liability is on someone else. So each one of those components, how certain can you make that cash flow stream? And the more we advance the industry and we get better offtakes and better feedstock agreements, then the infrastructure community will be interested in investing in it.
You use the term buttoned up, which I like a lot. I've used that terminology in some discussions, and part of why Grain exists is to try to button up these projects. So demystify the process, ensure we're driving the right processes, the right documentation, the right uploading of materials into certainly the diligence rooms, etc. Talk about your collaboration with Grain, how you envision Grain being able to be a key partner in de-risking and accelerating the amount of velocity of capital into these projects, and maybe vision for future partnership potential.
Grain has been a market leader in biochar. You guys are all across this industry, all across the deals that are out there, all across the technology solutions. And so we picked a lane with our first investment, and definitely as we grow, you guys are the go-to for what's our next opportunity to invest and what makes the most sense.
And I think I really appreciate that, Josh. It's been a privilege getting to know you and your team and learning from your team as well, because part of it is we have an iterative process. We want to be agile and ensure that our solution set is reflective of what the needs actually are, with the best interests of project developers at the heart of what we do. So grateful for the partnership and the continued relationship with Khasma. We've got a great grain jumpsuit on the way for you, so hopefully we're going to do a lot more site visits together in the future. And maybe just to close out, was there anything on Khasma, the work you're doing, how you're approaching 2025 that you wanted to hit on or let the audience know before we wrap up?
Sure. Yeah. We empower development teams. So if you're developing a low carbon infrastructure project and it's not a good fit for venture and it's not a good fit for infrastructure, come talk to us, khasmacapital.com.
Josh Kaufman, thank you for your time.
Thank you.